Hello, in this video I will show you how to save taxes now with a little known IRS approved tax strategy that real estate professionals can use to save $5,000 now. I'm Jim Flouse. I help real estate agents across the country to stop overpaying the IRS. I'm enrolled with the IRS to practice in all 50 states. And I'm especially excited to share this information with you because I do work with a lot of agents who are having breakthrough years. They're bringing home lots of money and they don't want to send all that money to the IRS. They need a tax break, they need a big deduction, and they need it now. So here's the deal. You already know this, that in your business you have lots and lots of auto expense. You're driving here, you're showing property there, you're selling homes, you're listing houses. You're all over the road, and there's a lot of things you could do to maximize your auto deduction. People often ask me, hey, should I take the standard IRS mileage rate, or should I deduct actual expenses? Or should I lease a vehicle, or is it better to buy? You know, would it be smarter for me to put a vehicle in my individual name, or should I list it in the business name? These are all valid questions, and if you have these types of questions, please type your question in the comments section below. I'll create additional videos to answer these questions. But in the meantime, let's go on to what I consider to be a tax-advantaged, money-smart way to purchase a vehicle for business use. Did you know that there are some vehicles you can purchase today and take a $25,000 expense write-off the very first year, right away? Now, not all vehicles are created equal when it comes to IRS rules and fast tax deductions, so choose carefully. Know which vehicles qualify for this deduction and which don't. Also, be aware of the fact that you just can't write off the total purchase price on an auto or a truck. That may be true with some business assets, but it's not true with vehicles. With vehicles, there's a couple rules in place. Section 280F of the IRS code allows you to take certain amounts of depreciation. In other words, spread that cost over 5 years. Why 5 years? Well, because it's the IRS, and they said so, and that's why. But they're called luxury auto limits. So, for example, you could buy a passenger vehicle, and you have a limit of how much you can write off this year, $3,160. Or you can buy a light truck or a van, and there's a little bit of a different limit, $3,460, about the same thing. But did you know that there are some vehicles which have a gross vehicle weight over 6,000 pounds that apply to another section of the IRS code, Section 179. It allows you to take a deduction on these vehicles up to $25,000. What does this mean to you? Well, many top producing real estate agents are in the 25% tax bracket. So if you have a $25,000 deduction, your tax savings is 25% of that income. In other words, $5,000. Now, most agents are in the 25 or even a 33% tax bracket, so your savings could actually be higher than $5,000. It's better. If you pay $40,000 for the vehicle and you write off $25,000, doesn't that mean there's still $15,000 of value? You can write that off over the next 5 years, which is another $3,000 in the kitty at the IRS. Essentially, it's like money in the bank that you can use as a write-off against next year's commissions. To that $3,000, you can add your gas expense, your oil, your tires, your repairs, your insurance, your license and registration. So, even property tax on the vehicle is deductible. So, this is a way you can save $5,000 this year, have money in the kitty at the IRS for future years, and still have other ways that we can deduct to save you more money on taxes. Keep in mind, you do not have to spend $40,000 to get this deduction. If you don't have $40,000 to run down to the dealership with, make a nominal down payment, finance the rest. You can still write off your $40,000 purchase. How do you know what the gross vehicle weight is? I'm often asked this question. Well, call the dealer. Ask them what the rating is on the vehicle. They'll tell you what the manufacturer's rating is for gross vehicle weight, or you can simply look inside the driver's panel, the door jamb on the driver's side of your vehicle. There's a metal plate there which will list the gross vehicle weight. So this is a powerful tax strategy, right? But is it suitable for every real estate agent? Well, it may be suitable for you, it may not be. I don't mean to come off and say, hey, this is a recommendation that I'm the tax expert and I'm recommending that everybody do this. It really comes down to your individual situation, what your filing status is, what your other deductions are, how much income you do have this year, what you're projecting for next year. A lot of things come into play here. Here's my recommendation to you. This is a great strategy in general. sit down with a tax professional to talk about the specifics of whether it's suitable for you this year. If you don't have a tax pro that you know and trust, certainly contact me. I'm here to help. Well, thank you for watching the video. Please subscribe to my YouTube channel by clicking the subscribe button. That way you'll be able to stay up to date on all the new videos I post, whether it has to do with new tax tips or changes in the tax law. Also, if you know other professionals in the industry who could save on taxes, please do share this video with them by email or text.